Oh shit, my bad. You were Matt. You started off the show. My bad. I just muted you as you were about to talk. All right, go for it. No, I don't hear you anymore. Shit, what happened? There we go. There you go.
Yeah, welcome, ladies and gentlemen, to the Daily High with your host, Matt McGregor and Tone Vase. I'm here in Tokyo, Kabukicho. I was here all night last night, and I'm feeling pretty shaky today. But I'm here for one more night just to drop in on the show to say hello. How are you, Tone?
I'm good. I'm good. Not out and about. Actually, in a proper studio for a change. So I will go with the screen share. We're gonna mute Matt, and if he's got any questions, because the price of Bitcoin is definitely moving, he'll jump in. All right. So
Fantastic.
should I mute you or you got it?
If you could do it, that'd be great. Thank you.
All right. We are off to screen share. The price of Bitcoin continues to rise along with all markets because so far, I guess the peace deal in the Middle East has some potential. I am still very, very skeptical on the peace deal. And if that peace deal doesn't work out, then it's very, very likely concern in the markets, especially in the risky markets, is going to come back. Um, all right, what I'm not doing is checking if this is working. Okay, it is working. I have the live chat. Okay, cool. Just needed to double check on that. And here is the weekly chart. A couple of days ago, or early, or at the end of last week, I said that, man, in order for the weekly to go bullish, we need a green star candle. And I wasn't really expecting a green star candle this week, but it is actually it's not possible for us to get a green star candle this week. We can get it early next week, which would be great. If next week's candle just starts trading at current price, or sorry, above this week's candle, so just breaking this week's high, we get a weekly green star candle, which changes a lot of things. There is still some concern that it could be this kind of a green star candle where we double topped like in early January, but I'm not expecting that. And the reason why I'm not expecting that is because this would now be um, yet another green star candle in this same vicinity. And that just makes me extra bullish. And that's why I'm not expecting it to be another head fake. I think the next one would be an actual breakout. That's my expectation. Let's talk daily chart. Man, I was pretty damn pessimistic right here. And all I was basically hoping for was a dead cat bounce. But the dead cat bounce was actually so strong that it is now preventing the moving averages from crossing over. And that is very, very important. Without the moving average crossover, we will look back on these couple of days, a year from now, and we will say, why would anyone ever be bearish? But what we don't see is that in the beginning of Monday's candle, the moving averages were basically crossed over. If Monday was going to be a neutral day and not like a $4,000 up day, if it was only going to be a $1,000 up day, and then another $1,000 update the next day, the moving averages cross over. And I know it doesn't mean, I know it doesn't like change everything in life because the moving averages cross over. But when we look back on this a year from now, if the moving averages don't cross over, everyone's going to say, oh, I was never bearish. There was zero reason to ever be bearish. The moving averages never crossed. There was never any confirmation. Everyone is going to give you all kinds of bullshit as to why they called it perfectly and they bought it right here at 98,400, and then they still go to their day job, right? But in reality, we had a lower close and we had a lower low, and there was every reason to be bearish here, and only a bit of a dead cat bounce was the only hope in this area. Or, as I stated on Monday, I really thought we can reach an MRI buy, and then off the MRI buy, we would have had a chance, but then we would have been dealing with the moving average crossover, which would have made it a little bit harder. It really shouldn't be any harder to break the crossover if it happened versus this situation where they're almost touching but not touching. But it does make a psychological difference even for traders and markets. Instead, what we have is kind of a weird situation. We don't have this triangle anymore, but what we could potentially have is an descending triangle, which is worse. So I'm not gonna do this line for now. For now, all I'm gonna say is I'm gonna take these arrows, I'm gonna switch them to, hey, I think we have a little more upside because we have resistance. And then because we're going up so far so fast, we may need a little bit of a pullback to confirm these moving averages. But I really want to see a couple of closes. Now I'm flipping the situation. Instead of wanting that MRI buy, now I want that MRI top. Now I want that MRI sell. And I kind of want us to stay in this line. I'm going to give us a little more headroom here. I'm going to get this horizontal can still stay. I'm going to delete it for now. I'll probably put it back. But we still have like 5 more days to reach here. And if we're going up for 5 more days, it's very likely we're going to break this horizontal anyway. But that is a good thing because I want to see a little more separation between these moving averages. And now it becomes a kind of tricky situation because you see how they're both dipping down? So I really want to see where 20 days are. So if I hold the shift key and I go back 20 days, as you can see, see, that's strange. Why would we be? Oh, okay, I know why we are dipping. Okay, so right now we are rising because we literally got rid of the lowest closer in this situation. But look what happens in a few days. In a few days, we're going to be removing the highest close in the 20 days. And that highest close is the $110,000 candle. So we have to try and make up for that. You see that 3 days from now. So we really need to be in that 108 plus range. Because no matter what happens, the moving averages are going to dip a little. But the 50 period moving average will still be using this 111 price, which the 20 period is not. We can still avoid the moving average crossover, but we do need to get up into this $108,000, $109,000 range, more like 109, 110. But even if we cross over in this stage, it's okay because crossing over with the price above the crossover is very, very different and very rare, by the way, than crossing over with the price below the crossover. Crossing over with the price above the crossover will only last like 2 or 3 days, and then it has to reverse again. So that's not a concern for me at all, as long as the price stays above both moving averages. Okay. Someone is asking if I'm concerned with the Fed's economy data that came out today. I'm not sure. I got to look at it. I actually just woke up, and this was the only time Matt could jump on a show. So I need to take a look. I can tell you if the market is concerned. And the market is only 25% concerned, so not much. Oh, we have a Fed rate decision on July 30th. That's actually in a couple of days. Okay. That's Monday. All right. I'm going to be flying to Alaska that day. So I don't know if there'll be a show that day.
Did you say July 30th, mate? Did you mean June 30th?
Oh, I'm sorry, July. You're right. It's not July yet. It's July 30th, so it's not on Monday. I really should have realized it because Monday is weird. I'm like, it's never on a Monday. It's always on a Wednesday. So I guess July 30th is going to be a Wednesday. Thanks, Matt. We will be covering that. The next one I will cover. Yeah, market is not very concerned. All right, so the daily chart is where it's at. We had a green star candle. We broke the moving averages. I am neutral to bullish for now. And now I'm treating these moving averages as support. And I still would not rush into the market yet. But it could set up a perfect situation with us breaking 110,000 next week and then going all the way to 125. I'm not sure what's going to be driving that market, but the TA is setting up for it. On the hourly chart, we have really, really nice consolidation, which was actually just broken this morning at 5 in the morning. The 5 in the morning candle kind of sucks. Everything was looking great. We had a beautiful ascending triangle going into 5 a.m. To me, this is very, very bullish. And I would have expected us to break up. We did not. We broke down. That's the hourly chart. The hourly chart doesn't have much support other than the moving averages. Maybe the 4-hour chart looks better. And it does not. Look at the 4-hour chart topping perfectly with the MRI top. And now we're on a red star candle, which we can still avoid with a little bit of a pump in the next hour and 15 minutes. So this is pre-market. So nothing that's happening right now matters all that much. I'll take a look at what the Fed announced this morning. What the hell is that? Let me see what was announced. Durable orders come in low. Well, okay. I mean, if U.S. is going to put a tariff on without any backup plan locally, that's what's going to happen. GDP came in kind of low. And initial claims were okay. So I don't think it's that bad. Again, we put on a tariff. GDP is going to go down. So it's I don't think it's that unexpected. I don't see any issues here.
Hey, there's a familiar
Andrew.
face here. This is
Yeah.
Andrew Beatty. If you watched the was it IFC karate combat fight, he was on the fight before me. He had a big win as well, and now we're here in Tokyo together. He just arrived.
Hey, Andrew, good seeing you, man. I was there. We were chatting for a bit over by the
Yeah, good to
bar.
see you. Good to see you, Tom.
All right, I better run off. If you want to pull up
you
pull up
guys
the
go
four.
have fun. Did he fight in Manila as well or no?
No. But we'll get him back in the ring. We'll get him at some point. That's for sure. He's too good to
You guys
lose.
have fun.
Like, just pull up the 4-hour charts for a second on with alpha numerics on, because I just want to make one comment. This is what we'll look back on. And Tone, you said it perfectly before. Like, when people will go back in history and like have revisionist history of what happened. That green diamond, the second green diamond we had there, it was right. And so I'll probably use that example in my classroom of like great buys. And if you zoom out, give it a little bit more size, you'll see that those two green diamonds inside the green wave are as textbook as anything you'll ever see. They both worked out fine. Throughout the earlier in the week, I just wanted us to get above that 200 moving average and clear all the moving averages, but we had a fantastic MRI top there come in. I would suggest a pullback now down to maybe the 200, the 30, the 50, which is the cluster there, somewhere like that. But all systems go. But I don't think we'll hold if we come back down and put a lower low in. Like if that channel that you were drawing before is starting to look like a downwards channel, like, so we really do need a full blown to clear that, basically that red MRI support and resistance zone that you've got in there. If once we get past that, I think we'll be looking really, really strong. I don't even need all-time highs. Just to break that structure, I'll be really happy. What are your thoughts?
And look at the last two times we broke the MRI resistance line. Look at the quick run-ups. And now we had this envelope of the MRI support down here at 96, MRI resistance at 110. Now we have a new MRI support at 105, and I don't want to see that broken. We can break it intra-candle to bounce off the moving averages, but I do not want to see a close below MRI support and 200 and the two moving averages. There is a nice cluster here. The range is a little bit wide. The range is like 1,500, but I would love to avoid it. But we only need to avoid it at the close. It's okay if we dip into 104s as long as we don't close below 106. And I would love to avoid a 4-hour 106 close. The moment we get a green star candle at 108, I think we're going to rally easily to 110.
I agree totally, mate. All right, it's getting rowdy here. We might have to fight somebody. So we'll talk soon. And happy Bitcoin Day. Go for it. See you, mate.
All right, guys. Just to close us off, we have a new high in the Bitcoin dominance, which is great. I think that's going to keep moving. Gold is pulling back a bit. That's okay. Oil is still near the lows, indicating that there is some peace in the Middle East for now. And S&P 500 is stuck at its MRI resistance, which has been there since early March. Wow. That's almost 3 months. April, May, June, almost 4 months. We're going into July. Wow. Okay, that's a while. That is a while. Interesting. I think we're going to break it. Just like with Bitcoin. I think we're going to break it. Recession, no recession, I think we're going to break it. Is this the... Okay. Wait. Oh, that was a daily chart. I switched to the weekly chart. The weekly has its own resistance area. See, we kind of broke it. I got to get rid of some of these candles. Some of these lines, sorry. We almost broke it. Look at that weekly candle. We almost hit the MRI resistance line. And we almost hit the SAR, the modified lucid SAR from Alpha Numerics. I think we're going to break it all next week. So I remain bullish here. Oh, the futures market is looking good this morning. So clearly no one is concerned. And as far as the 10-year yield go, nope. Let me see the 10-year yield. It says the yield curve. Where is the 10-year? See, the 20-year is all the way up here, and the 30-year is all the way up here. And the 10-year is right here. I don't see anything in the 10-year that's indicating that the Fed has to drop the rate. We could isolate the 10-year yield. Where are my lists? Where are the rest of my lists? I have more lists. Open list. So here's the 10-year yield. I mean, it's dropping a little, right? But it's still higher than it was back in April. And the Fed didn't lower the rate back in April, so why would they do it now? Right? When did they drop the rate? This is the monthly version. They dropped the rate back in, they stopped dropping the rate in January of this year. So the rate's been the same since up here. Well, why were they dropping it here? Well, that made no sense either. They were dropping the rate from August into January. So the Fed but the 10-year would have been rising. Yeah, here's the 10-year. Yeah, they were dropping it all through here, which is kind of strange. But no, why would they drop it now? It's the yield is higher than. Let me isolate this. Where's the 10-year? That's the dark green. That's this one. Right, so the 10-year was rising September through January while they were dropping the rate. So I don't know. That doesn't really make sense to me. Because they always start dropping the rate late. They should have been dropping it should have never been dropping the rate, but because they were dropping the rate, they should have started dropping the rate in October of 23 when the rates peaked and started to fall. That's when they should have dropped the rates. And as of September of 2024, they should not have been dropping the rate, but they're always late. The Fed's always a year late. They're never a dollar short because they're always printing money. Well, they're not really printing money. The Treasury prints money, but that's a whole other case, a whole other discussion. Now, I don't see them lowering the rate at all, especially not with all the yields rising right now. See, everything is going up. Makes no sense. When is the show with Mark Wood? Good question. I'll hit him up. All right, guys, that is it for me. Not much to say with the markets closed. The futures are doing well. We can go to the 10-minute side on the futures. We had a little bit of a fall at 8:30 in the morning. We're a little bit behind here. We had a 10:30 in the morning dip with negative GDP stuff, but I don't think that's a big deal. Oh, we do have a weekly MRI top. Keep an eye on that. That's a weekly MRI top candle. Wait, but it's not a weekly MRI top candle. What's going on? Something is off on the data here. Never mind. Yeah, it's telling me that there's a weekly MRI top. That is very strange. That is very strange. See, weekly MRI top. Weekly MRI top. But when I go to the... Oh, there it is. So what was I on before? Was I on the monthly? Oh, I was on the monthly before. That's why. So the monthly is on an extension C and the weekly is on an MRI top, breaking the MRI resistance line. But the cash market, is the cash market on a weekly MRI top as well? It's not. It is. Okay. Yeah, so stock markets are at a weekly MRI top. It is a bit of a concern. 1 to 4 candle consolidation here. Maybe a pullback. We'll see. We'll see what happens. As long as the stock market isn't crashing, Bitcoin can outperform. So just keep an eye on the weekly MRI top in the stock market. All right, guys. Thank you all for watching, and I will see you all on the next one. Bye, guys.